Alright, welcome back. In this video, we're going to be going over liquidity injections. Okay, now, in order to learn about liquidity injections, you need to learn about liquidity. You need to learn about the importance of consolidations, and second thing, liquidity pools, okay? Anyways, that's just a little warning, a little disclaimer before you continue to this video. But, liquidity injection. Liquidity injection, if you've seen the market efficiency paradigm video in the ICT Mastery Mentorship, you will know that the smart money is always looking to remanipulate the dumb money's orders, okay? And that's basically what liquidity injection is. Because the dumb money's orders rest below old highs and old lows. Very simple, not hard at all, right? So, knowing that, the liquidity injection occurs whenever price purges a low or high and accumulates those orders. Now, whenever I say accumulate, okay, I've said it. I love the word accumulation. Okay, if you go to my Discord and you search up the word accumulate, you'll see that I say the word accumulation a lot. Accumulation is this: when price is doing this, when price is doing that. That's accumulation. When price is going up and down, up and down, and down. That's what accumulation is. Okay, and it happens right here. Price takes out this low here, and this is what sell side liquidity. If I can even get it, sell side. So it takes out sell side, and it accumulates those orders. What I just say accumulation was. Accumulation is back and forth movement. Price takes out the low, right? And it accumulates those orders back into the market, right? Sending the orders right back into the market, reversing liquidity, I guess you could say, re-engineering liquidity. It takes that low of stop losses, buy stops, and sell stops down here, right? Or really sell stops and stop losses. So the dumb money can protect their orders below this low. They're protecting their longs below this low. And the algorithms, the high frequency algorithms know that. So what they would do is they would come down here, take out that low, reaccumulate those orders to manipulate these retail traders or the dumb money. They would manipulate the dumb money by taking out the low, accumulating those orders, re-injecting it back into the market to push price higher. Does that happen? Yes, it does. And also, don't mind my drawings because I do my analysis too. But that's liquidity injection. Whenever price takes out a low and immediately accumulates those orders back into the market, okay, causing a reversal. Okay, and basically it's the opposite thing with buy side liquidity. If it takes out buy side and it accumulates those orders, and it accumulates right after the buy side is taken, I mean right immediately afterwards. Because you see it accumulates right after sell side is taken. It doesn't like head up, then accumulate. Okay. Now, that's liquidity injection. But when the liquidity injection occurs, that accumulation, right, is a liquidity pool. It becomes a liquidity pool. Now, if you go watch the liquidity pool video, and yes, I do have a video on liquidity pools, I told you that liquidity pools can result in higher probability turtle soups, okay? So, and like I said in the liquidity pool video, the liquidity pool is where all the wicks and the bodies are accumulated at. So this right here is your liquidity pool, all the way down to that right there. This is the liquidity pool right here. Because you see how all the bodies are like bunched into each other, and all the wicks are bunched into each other? That's your liquidity pool. So seeing this liquidity pool, right, and you know that price is ready to head higher because it re-injected liquidity into the market, this injection or re-injection into the market creates a liquidity pool because this is where it injects liquidity. So this is the liquidity pool. Knowing that if price comes into that liquidity pool, right, you could take that as a turtle soup. You can. And remember, liquidity pools aren't just, it doesn't have to take this out. If there's a liquidity pool there, it doesn't have to take out that sell side liquidity. That's just one reason. And another reason why it doesn't have to come down to this low is because it already took out sell side and it closed above it, showing a willingness to go higher. So, since we already took out this sell side, right, we don't need to come to this low here. We're just focused on this liquidity pool here. Because look, let me show you something. Let me do liquidity pool scan. Liquidity pool scan. You see how all the bodies down here like kind of really close to each other, right? And then if we throw it right back on, you see how the wicks are kind of close to each other too? But it's mainly the bodies. Focus on the bodies, okay? The bodies are the main thing. Bodies are the main thing. So if we do that, if we go back on the liquidity pool scan, right about here is the liquidity. About there. That's the liquidity. If you look, It came right down to it, right there. This is where the liquidity pool ends, right here. Bam, right there. That's the liquidity pool. That's where it ends, right there. Matter of fact, no, it's actually right here. Bam, because this is a part of the liquidity pool too. It came right to it, exactly to it and reversed. Okay, and whenever you see that liquidity pool get purged, you can immediately place a buy or place a long. Whenever you see that get purged, you can immediately place a long. Okay, so it came right into the liquidity pool right here. Starts with the bodies. Okay, that's what the liquidity pool is with the bodies. Whenever you see a accumulation and the bodies are, I guess you could say, very close together or like abnormally close together, something that you don't see a lot basically. Because if you go back onto the liquidity pool scan, you can see how the bodies are like creating some sort of pattern. And this is the liquidity pool right here. Price comes into the liquidity pool, purging it at this line here. Delete this one so it won't confuse you. It comes into that line or this liquidity pool. Once it comes into it, long right there. Bam. That's your long. What you can do is that you can have either have your stop below this low. Why do you want to do that? Because, like I said, I gave you the reasons why I shouldn't come to this low. Because it already took out sell side liquidity here, and it closed above that liquidity point there. It then created a liquidity pool. So if there's already been a purge of liquidity, and then a liquidity injection, creating a liquidity pool right after the purge of liquidity, there's really no need because you have to understand why price is doing certain things. And I will have a amplified consortium going over the whys and basically the lore behind price action because people be like, "Oh, fair value gap, let's take it." No, come on. Think. What are you doing? You probably look stupid right now. Just think. You have to think of why price is doing that. Like whenever you see something happening, you have to think, what is going on? Why is it doing this? Or any other confluences on me? What to do? It's basically just, putting the pieces together. Because I still use this analogy to this day, right? Let's say you're putting together a puzzle, okay? Now, clearly, one piece to the puzzle isn't going to solve the puzzle, right? You're going to need a lot of pieces. So, if you grab one piece of the puzzle and throw it down on the table, is the puzzle solved? Nope, it's not. The puzzle is not solved. You need multiple pieces of the puzzle to solve the puzzle, right? Same thing with trading. If you say a fair value gap just formed, and I'm gonna take it, that's just one piece of the puzzle, bro. You have no clue what you're doing. You have to grab 6 other pieces of the puzzle and see what's really going on, and then you crack the puzzle. Simple, very very simple. But that's liquidity injection right there. Whenever price takes out a low and accumulates. Oh my god, my mouse is tripping out. Why does it do this? I hate that so much. But it's whenever price takes out a low and re-injects the orders that are resting below that low by accumulating, okay? And when it accumulates, it creates a liquidity pool with the bodies, okay? The accumulation of bodies is the liquidity pool, okay? Price comes out and takes out the liquidity pool, immediately heads higher, okay? Why does it head higher? Because it has one final purge of the liquidity pool. The liquidity pool is the I guess you could say the act of price re-injecting the orders back into the market, right? So whenever you see price take out a low, accumulate, that accumulation is the liquidity injection, okay? And the bodies of that accumulation is the liquidity pool. And that liquidity pool would be your entry, okay? Because if we look, it didn't displace as much as this. Why? Because there's a liquidity pool there. It came back and re-engineered the liquidity that was resting down here into this liquidity pool. So it took the orders that were resting there, re-engineered it, and injected it back into the market through this liquidity pool. Okay? Since we know that, we're like, okay, price is going to come down into this liquidity pool and head higher. Did it do that? Yes, it did. It did. Now, if you wanted to be a daredevil and hold this all the way until like, I don't know, 3 o'clock, which is basically the end of New York. Wow. See that risk to reward? That's amazing. But like, but no one will ever do this. Bro, I just did like a 6 wrist reward today, like literally. It's not hard at all, man. I think I did it from about here on this candle, no, not there. Somewhere around here. It came up to like this order block right here. that 5-minute order block, and I have my stop here, and then I have my take profit down here. See, look at that. It already lines up to 5. So doing 13 RRs like this, or risk to rewards, is really not hard. You just have to pay attention to what you're doing and really understand it. I might go over one more liquidity injection, and I think that'll be it for this video. Let's see here. Right here. Right around here. Do you see it? I think you should be able to see it. Right, yeah, you see it. You see it. All right. So, I think the liquidity injection occurs twice. Actually, yeah, it does. So, there's one here, and then there's one here, okay? There's a low. Bam. Okay. There's another low. Bam. Let's go over this one first. Price comes and takes out that low and accumulates it. As if we look at the bodies, what are the bodies doing? They're kind of resting in the same exact area. So, there is a liquidity pool right about here. There's a liquidity pool there. That's a pool of liquidity. We can mark that as liquidity pool. Simple, right? Going back here, the liquidity pool is right there. Price takes out the low, re-injects the liquidity by accumulating, creating a liquidity pool at the bodies there. Okay? So we know in the future that price is going to come down into that liquidity pool, and then we can place our long. Several candles later, we come back into that liquidity pool and also take out this low here. Simple, right? Nothing hard. Price comes down into the liquidity pool and into this low here, right? And then what does it do? If it does go past the liquidity pool and comes into a further point of liquidity, pay attention to what the candles are doing. Pay attention to what's actually happening. Look at that candle. You see how it went into the sell liquidity point here and closed above it? We dug a little bit below it, a little further, a little bit further. That's it. It's really it. Just a little bit further. And then what happened? We shot up. We did. We shot back up into this liquidity point here. Shot right back up into that high. Bam! Right there. See that? Isn't that crazy? That's amazing, isn't it? That's pretty wild. Like, honestly, that's truly amazing. But, if we look again, we check out this low, and we also accumulated again. So, we took out the low. After we took out the low, we accumulated, we accumulated, which causes... Okay, let me reword that. Give me a second to lock in. We came down into this low, right? After we did that, we accumulated, which re-injects the liquidity back into the market, resulting in a liquidity creation. So, upload the liquidity pool scan. There's liquidity pool right there. Bam! If I can get it, that's liquidity pool right there. That's it. If I go back to my red and gray, did price ever come to it? Not really. No, I didn't come to it. But there was too much institutional sponsorship on a higher time frame. I'll be going over institutional sponsorship in the future because it's a pretty strong concept from what I've been saying in back testing. But I'm going to go over this one more time so you have a clear understanding of what liquidity injection is and how you can implement liquidity pools as entries, okay? Because if we're just talking about liquidity injection, it's just when price takes out a point of liquidity and accumulates. That's it. That's it. Okay? That's it. That's a confluence. Whenever price takes out a point of liquidity and accumulates. That's it. That's it. Okay? But if you want to amplify it a little bit more and take an entry in the future, you can take an entry then at that point of the liquidity injection, and then later in the future when price comes back into that created liquidity pool. Simple. Very, very simple. But I might just be ending this video here because I don't think this concept deserves a lot of love. Actually, no, it does. It's a very good because price does this crap every single day. So yeah, this is a good video. But I hope you learned a lot from this when it comes to liquidity pools and liquidity injections. I'll be in this video here, and I'll see you guys later. Peace.